This is Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are kicking off a fresh new week. Will this be the week where the market, after breaking out of a range last week, keep going and make significantly newer highs? That's the question, isn't it? We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. As always, with me, my colleagues Sonia and Nigel. Morning, guys.
Hi. Good morning, Prashant. Good morning, Nigel. And the market momentum continues, right? Given all of the bad news that has been thrown at it, the Nifty closed above the 22,000 mark, so the going has been pretty good.
Yeah, we're making fresh all-time highs, Prashant. I don't think it's a question. We're going there. Maybe we go there today as well, but we're going there for sure.
Absolutely. But will we keep going after that, right? Because the new high is very close by, and we'll kind of have to talk about that. But, the breakout happened. So let's just rewind the clock back for a second and tell you that the market on Friday, and actually on Thursday, that follow-on buying which was missing, right? I mean, day two follow-up was missing for so long, that actually started to show through. So, for example, Friday was a case in point. There was follow-on buying which I think, which set in, and we ended about 0.6% higher. Now, the Nifty presumably is targeting new highs, new all-time highs in that sense, and I'll get to levels in a bit from now. U.S. markets, right? It's a bit of a setback in the U.S., largely on the back of inflation numbers. S&P was down 0.5%, the NASDAQ is down about 1% or so, and U.S. inflation data. So we had CPI numbers, that's consumer price inflation, and then we had producer price index numbers, which came through on Friday. It remains uncomfortably high. I mean, both these data points, and that's a headache for the Fed. So U.S. core PPI, that is producer price index, came in at about 0.6% month-on-month growth, and that is a significant beat. You also had the preliminary Michigan survey, within which inflation expectations were extremely sticky and again high. So we had two data points on Friday, which once again kind of sort of throws the ball in the Fed's court in that sense about what they're going to do. The yields went up. The 10-year, which had cooled off a little bit, was up 5 basis points. We're at about 4.28%. So Friday to Friday, that is last week, the 10-year is up about 15 basis points. The dollar index didn't do very much. It was flat, slightly above the 104 levels. Just this one interesting data point. From the beginning of this year, the 1st of January till where we are right now, the futures market has removed about 70 basis points of rate cuts which they'd priced in. So they've taken that out. Right, that's what we've been talking about. Rate cuts, the first rate cut in terms of expectation has been pushed out to June, and the quantum of rate cuts that market expected to see on the 1st of January, perhaps it was an exaggeration, that's also come down quite a bit, and you got these inflation numbers which have come through, which I think will add to this. Oil prices, they're holding above $83 a barrel. So, I mean, this is important because, I mean, not just for the market overall, but, I mean, oil, OMC, standalone refiners, these have been such pockets of momentum, right? So keep an eye out on this one. All right. By the way, China is back from New Year, sort of lunar New Year holidays. They're back today. So we'll kind of talk more about China as well as we go along. U.S. markets are on a holiday today, so no action in that sense. So we'll operate in a bit of a vacuum off of the cues that we got on Friday. Now to the levels. Nifty is inching towards the resistance line of 22,130. What do I mean by that? Basically, the market's gotten to these levels. 22,126 essentially was the high. We've gotten to this level 3 times, and then the market's kind of come off. That's the reason why it's a minority. But there is a view that perhaps, once you kind of reach there, is there enough fuel in the tank for the market to keep going above that? So 22,130 approximately is that sort of number on the Nifty spot, which you need to close above in a convincing way for upsides to kind of open up. The 20-day, on the downside, the supports come in at the 20-day, which is 21,700, and the low of 21,530 are key downside levels to watch out for. And of course, a break below 21,530 will be decisive. The Bank Nifty almost hit the previous high of 46,892 on Friday. It didn't quite get there, but almost there. And that's the first level for the Nifty Bank to take out. Remember, stocks like HDFC Bank, etc., seemingly have made a bit of a bottom. Bank Nifty, and on the downside, must not break the 40-week exponential average, which is 44,858. I would still say the thing to do is to buy the dips and not chase the rise or chase the rally. It's not a big rally the GIFT Nifty is indicating. I think it's about 40, 50 odd points or so. But I think the big one is going to be whether the market kind of bumps into that level on the upside, which it's not been able to take out the last 2 or 3 times, or it respects that, or it keeps going with momentum. And what will lead this, I think, will be interesting to watch as well. Sonia.
Oh, absolutely. And the momentum continues, right? There's no two ways about that. The Nifty, after all the to and fro that we saw last week, closed above the 22,000 mark, which was a milestone, at a 1-month high on the Nifty. And the dips are getting bought day after day. It's been 4 straight weeks, 4 consecutive weeks of gains for the index now. And if you look at it on Friday as well, we saw buying both from foreign as well as domestic institutions. DIs bought almost 1,600 crores in one trading session. In fact, DIs have been pumping in money for the last 5 consecutive trading sessions. And now in the month of February already, domestic institutions have pumped in almost 18,000 crores. So large chunks of money coming in from the domestic fraternity. Autos have been surging. In fact, on Friday, you saw names like Bajaj, Maruti, TVS, M&M all hitting record highs. Put together, all of these stocks saw a cumulative 1,000 crores of delivery-based buying. Bajaj, Maruti, M&M and TVS put together. So, you know, that is one space that could continue to see traction in the days to come. There is an HDFC Bank analyst meet later today. There's the FTSE rebalancing as well. So all of that, should be kept in mind. Paytm has tied up with Axis Bank as its nodal bank. So that could perhaps give some amount of relief to the Paytm stock. Keep that on your radar as well. And if you're looking out for global cues, the US markets are closed later today, so no cues coming in from there. But all eyes will be on the US FOMC minutes that come out this Thursday. So lots to reckon with. And this morning looks like it's going to be a pretty decent start for the markets, up almost about 55 odd points. So I guess it's green all the way.
Well, that's right. It's green all the way, Sonia, to kickstart trade. And if you look at the 1-month chart of the Nifty, actually, when we started the series, people a little bit cautious. Why are the FIs, net short on the index? Well, that's been a blessing in disguise, because the markets have seen a rally of around 690 to around 700 points in this series so far, from January 25th, effectively. And that's the power of short covering. So you just pull up a data point. The FIs at the start of the series, well, they were aggressively net short. That positioning has come down gradually. From around 78%, it's come down to around 62%. That's not all. If you pull it up in absolute terms as well, at the start of the series, they were net short by 1.1 lakh crore, 1.1 lakh contracts. And that's come down to around 68,000. So there's been close to around 40,000 contracts that have got covered out from the FIs. And that's also telling you the same picture in percentage terms. Short point, FI is net short. That's been a trigger to go ahead and buy the Nifty. And that's worked out for the last few series. On Friday's trading session, well, they added more long positions, close to around 10,000 contracts in comparison to 5,000 contracts on the short side. So that was in the ratio of around 2:1. Moving to the strikes that were very active. In an uptrending market, you want to see the nearest possible put, see a fair bit of writing. And that's precisely what happened. 22,000 put, fair bit of writing is what we saw out there. But there is some action at around the 22,100 call, which gives me this broad 400-point range. On the upside, 22,250, that will be the next resistance we're looking at. While on the downside, 21,500, we have bounced off numerous times from there. But I think in the near term, the 21,850, that will be a bit of a support zone going by the options data out there. The Nifty Bank, that's going to be the one in focus. HDFC Bank in the near term, there will be a lot of interest with regard to that analyst meet and the likes, and as well as that rebalancing. So the Nifty Bank has done well for the last few sessions, and now it's crossed, the 20 DMA, but you'll want it to get past the 50 DMA, and that's around 500 points away from current levels. So that 46,900 to around 47,000, that's the next hurdle. You want the Nifty Bank to go there. If that's the case, well, the Nifty will get a lot of support from that as well. Stock of the day for me will be Tata Communications, because I was looking at the data points. It had a bit of a breakout that we saw on Friday's trading session. So now it's trading above the 20 as well as the 100 DMA. So let's get that chart up for you. It's crossed those crucial technical levels. And backed by that, you have fresh long addition in the F&O market. Close to open interest was up by roughly around 5%. And there was some delivery-based buying as well, which was much higher than what we've seen on averages. So the markets opened up well in the green. Tata Communications, the stock maybe you could keep on your radar. And let's see if the Nifty Bank has enough to go to those 50 DMA out mark.
All right. Thanks a lot, Nigel, for that. So lots to talk about in trade as we begin a brand new day. On the equities front, we have Surendra Goyal of Citi, who says that Q3 delivered another resilient earnings season with BSE 100 EBITDA growth at 18% and the Nifty EBITDA growth at 13% year-on-year, largely led by industrials and energy. He says earnings growth for BSE 100 was also ahead at 19% and Nifty at 10% year-on-year. He adds key sectors with both earnings beat and upwards revision to estimates include auto and healthcare, while financials and materials missed estimates and saw downward revisions in earnings.
All right. Morgan Stanley's Rhythm Desai says that earnings growth trend remained intact in the third quarter as margins expanded for the fourth straight quarter. Revenue and earnings growth beat expectations, albeit breadth in earnings beat was at a 5-year low. He adds the broader market earnings outperformed the narrow market.
Well, we have a lot of stock specific action track for you. We get to that in just a bit. For the time being, though, we run you through the list. We look at HDFC Bank, DrRed's, PTM, Sula Vineyards, Balamurthy, Tata Power, Data Patterns, Crystal, Titagarh Rail Systems, as well as defense stocks. All of them will be reacting to positive news flow. It's a Monday morning, and in our top 10 segment, most of the stocks will be reacting to positive news flow.
Steve Bryce is with us now. He's Chief Investment Officer at Standard Chartered Wealth Management. Steve, good to have you with us here. Thanks very much. I mean, the only question is whether inflation in the U.S. is so high that it causes a correction in the U.S. market. What do you think, Steve?
So I think, we're looking for a short-term pullback in US markets. Obviously, that's always a dangerous positioning to have because obviously markets generally trend up and to the right of any chart. But I think that the two key things, obviously, firstly, you mentioned the inflation piece as potentially a stimulus for that. We've been watching obviously what's been going on in the Middle East and the disruption to global trade flows through the Red Sea and through the Suez Canal. And clearly that is going to have a stagflationary effect to some degree. So obviously there is a growth impact. There's also an upside inflation impact. So that's something that we're keeping a close eye on and have been putting some short-term inflation hedges in our portfolio. We still think the big picture is for inflation to come down, but we could get some short-term disappointment. And the second thing is we're seeing very significant high level of positioning in US equities. So we look at our own proprietary indicators, also a lot of the indicators around in terms of market positioning, and they're all pointing to quite an elevated positioning in US equities at the moment. That overweight stance could lead to some short-term disappointment. I guess maybe looking back to the first point, the only risk is that we're not alone in looking for this. I think a lot of people are starting to talk about it over the weekend. I saw a lot of news reports, people flagging this risk. So we could still grind over higher in the immediate future. But I think, we wouldn't be adding to equity portfolios. In fact, we've been trimming a little bit so far this year.
Okay, you have trimmed a little bit from equity portfolios. I think that seems to be the narrative across the board, right? Not just in the US markets, but back home in India as well. What's your own sense of how Indian investors should approach it? Do you think raising some amount of cash levels is a prudent idea now, Steve?
The way we look at Indian markets, we expect both equities and bonds to outperform cash over the coming 6 to 12 months. So obviously, I think that the positive macro story is very compelling, probably more compelling on the equity side than on the bond side at the moment. But overall, we see the trend as being higher. And really, you do have that, obviously, the regular investment plans that people have in India does seem to put a consistent floor under the market. So we'd probably say that any weakness in the Indian market may be less severe than what we see in the US. Probably be a little bit less patient to add to Indian portfolios than we would be in the US.
All right. Hi, Steve. Good morning. Good to see you in. Nigel on this side. The last time you were telling us that it's hard to ignore China at these levels. So what would your allocation be in emerging markets? So, incremental money from here on.
Yeah, so it's really challenging, right, the China situation. We've obviously seen some decent data in terms of the amount of travel that's gone on over the Chinese New Year period. But then average spend still, quite subdued, certainly down from pre-COVID levels of 2019. And there is quite a lot of headwinds. So we talk about the positive narrative we have for the Indian economy. You have the reverse situation for the Chinese economy. There's a lot of negativity out there at the moment. Obviously, a lot of that's priced. And we could still see quite a decent bounce in Chinese equities. I think it's really dangerous to be underweight Chinese equities. We have around a 4% allocation in our growth portfolio at the moment to Chinese equities. We're not overweight. We have a neutral allocation, but that's around that 4%. But really to mark probably a long-term reversal of the downtrend, we need to see some positive policy responses generating inflation. To be honest, that's the key thing. We're slipping. It seems to be into deflation. If that was to become a long-term phenomenon, then I think that would be a massive headwind for the market on a longer-term basis, regardless of the cheap valuations we're seeing at the moment.
All right. I don't know if you can pull up the Shanghai composite. I mean, because the Chinese market is back from a holiday. Hang Seng, of course, was trading last week. And Hang Seng, I think, did well. I mean, that's a proxy for what the mainland China stocks do. And that did well. But the Shanghai composite, Shenzhen, etc., will try and have those indices up as well. Steve, great speaking with you. Thank you very much for joining us here on CNBC-TV18. It's a pleasure, as always. We'll take a quick commercial break here. A list of top stocks to watch lined up next. Stay with us.
Welcome back to Bazaar Morning Call. Well, this morning, the Gift Nifty is implying an opening which is 60 points higher. So looks like we're going to have a good start. Let's see if we can build on to that. Our research team is joining in now to help us with the top stocks for the day. HDFC Bank will definitely be in focus today. Abhishek is here to give us the latest on that. Abhishek, morning.
Morning, Sonia. So HDFC Bank, there will be some FTSE semi-annual rejig, which may see an inflow of around $400 million as per IFL alternate research. Now, this 400 million would form about 0.3% of the market cap, or about 1.5 times of Friday's total traded volume. So this rejig or adjustment will take place on 15th of March 2024. Back to you.
Okay, all right, Abhishek, thanks a lot for that. But the big breaking news over the weekend was what Vivek brought to the table. Vivek, tell us more with regard to this evolving story on DrRed and Novartis.
Well, absolutely right. So this is CNBC-TV18 exclusive. Now, what's actually happened is that, number one, we reported over the weekend that DrRed is leading the race to go ahead and acquire Novartis AG's a little over 70% stake in BSE-listed Novartis India. Now, we also understand from our sources that given that this would mean that DrRed would get controlling stake of the BSE-listed arm of Novartis, they would also be going ahead and offering a slight premium to the current market price of Novartis India. Now, what is the reason or what is the rationale behind DrRed going ahead and acquiring this particular portfolio or this particular company? Is the fact that DrRed has in the past stated its intent to go ahead and grow its India domestic portfolio quite aggressively, and also at this point of time the company has ready ammunition to go ahead and acquire portfolio. Along with that, there are significant synergy benefits that the company already has in terms of having past experiences and past tie-ups, strategic as well as distribution tie-ups with Novartis India's portfolio. We reached out to DrRed. DrRed told us, they wouldn't like to comment. They also proactively told the exchanges that at this point of time, there are no material disclosures that they would like to make. Now, we had also reached out to Novartis on Friday. During the day, we did try reaching out to them multiple times. Novartis, proactively told exchanges as well as, media people that Novartis AG has now decided to go ahead and review its entire 70% stake in the Indian listed arm, that is Novartis India. Also, what they've said is that they've told us that at this point of time, no decision has yet been taken regarding the eventual outcome. Interestingly, today morning, Nomura has also written a note saying that, it does appear as though DrRed would stand to benefit significantly from this particular deal, and they expect DrRed to aggressively go ahead and bid for this particular stake.
All right, Vivek, thank you very much. Stock was up sharply. Novartis stock up sharply on Friday itself. But that's a big story which we will continue to discuss from all angles here over the next couple of hours or so. Now let's talk about PTM, that is 197 Communications. There were two bits of news flow after market shut on Friday. One, of course, was the RBI giving PTM Payments Bank another 15 days, the extension of 15 days to its earlier deadline of 29th of February. And second, Axis Bank tying up with PTM Payments Bank on the merchant side to be able to settle all their transactions, etc. Ritu is here with details and implications from these moves. Ritu, over to you.
Well, essentially, Reserve Bank of India has given PTM Payments Bank 15 more days to stop all of its banking activities in larger public interest to ensure that customers are not inconvenienced. So in a modification of its January 31st instructions, RBI has now clarified that no further deposits or credit transactions or wallet top-ups will be allowed across PTM Payment Bank's customer accounts, including your FASTags and mobility cards, after the 15th of March, which is the extended deadline compared to February 29th earlier. RBI has also granted a 15-day extension for PTM Bank to stop all banking services by the 15th of March, which is the new deadline. Withdrawal or utilization of balances across banking accounts of PTM Payments Bank, Savings Bank, current accounts, prepaid instruments, FASTags, etc., that can continue unrestricted as before. However, RBI has not granted any extension when it comes to the termination of nodal accounts of 197 and PTM payment services maintained by the PTM Bank. That has to be done on or before the 29th of Feb. RBI has also directed that withdrawals up to the available balance must be facilitated by PTM Bank from all accounts and wallets, excluding the ones which have been frozen by law enforcement agencies. But apart from these, RBI, of course, has also come out with a much-awaited 30-odd point FAQ on PTM Payment Bank to answer any questions or clarifications the public or the users of PTM Bank accounts or wallets may have about the usage of services after the 15th of March. For more on that, you can go onto our website CNBC-TV18.com to find any answers to questions you may have.
Brilliant. Thanks a lot for that, Ritu. Well, let's go back to Abhishek. He's going to spice things up. There's a big, large trade on Sula Vineyards today, and Abhishek's got the information. Abhishek.
Well, sources do tell us, Nigel, that Wellin Invest Asia PTE to sell their entire 8.34% stake in Sula Vineyards. So the deal size could be around 435 crore. In terms of the offer price, it's anywhere from as low as 570 to as high as 617.55 per share, which means a maximum discount of about 7.7% to the closing price that we had on Friday. Now, Kotak Securities is the sole broker to the lead. So this is a clean out trade as the entire stake is being sold. Back to you.
Okay, all right. Thanks a lot. So there's a block deal in Sula Vineyards, but Vamakshi is with us to tell us about Balrampur Chini and why you should be watching that one. Vamakshi, morning.
Well, yes, good morning, Sonia. Balrampur Chini is in focus today after the company announced its foray into a new line of business. They will be manufacturing polylactic acid or PLA. Now, just to give you a quick background about this, the Union Budget introduced a new scheme for biomanufacturing and biofoundry, and this foray has been made in order to capitalize on this very opportunity. Now, the company has said that they will be making an investment of almost around 2,000 crores over a period of 2.5 years, out of which nearly 800 crores will be funded through internal accruals, while the rest 1,200 crores will be through debt. Now, they will be constructing a PLA factory with a capacity of nearly 75,000 tons per annum, and in fact, this will be the first industrial bioplastic plant in India. Moreover, they've also announced some other measures. Recently, they acquired a minority stake in Konkan Specialty Polyproducts, and this was done in order to bolster the market presence in PLA. Moreover, they've also announced the appointment of Mr. Stefan Barod, who comes with nearly 13 years of work experience in the bioplastic industry. So a lot of positive factors working out there for Balrampur Chini, and on the back of that, I expect the stock to open in the green today.
All right. Makshi, thanks very much for that. So that's the news on Balrampur. Well, more stocks with news flow. Sudarshan is here with that list. Sudarshan, hi. Morning.
Morning, Prashant. So first, I'll start with Tata Power. It has got letter of intent to acquire Jalpura Khurja Power from REC for an amount of rupees 838 crore. Next is Data Patterns. Florentry Capital has sold its entire 10.71% stake via block deals, and Singapore government and Kotak mutual funds are buyers. Titagarh Railway, it has got order worth rupees 170 crore for supply of 250 specialized wagons to Defence Ministry. And keep an eye on defence stocks. Defence Acquisition Council has cleared capital acquisition proposals worth more than rupees 84,000 crore, and these proposals are cleared to boost capabilities of armed forces and Indian Coast Guard.
All right, thanks a lot, Sudarshan, for that. Here's a quick recap of our top stocks. Stocks with positive news flow. There's HDFC Bank, DrRed's, Novartis, PTM, Sula Vineyards, Balamurthy, Tata Power, Data Patterns, Titagarh, Rail Systems and Defence stocks. While today there are no stocks on the radar that are likely to open in the red. I mean, no stocks with negative news flow, that is. But let's see how it goes from here. But the FTSE has announced the results of the semi-annual index review. Vivek has all the details for us. Vivek, over to you.
Well, that's right. Last week was a busy week as far as passive fund was concerned, given the fact that both MSCI as well as FTSE went ahead and announced the rejig. So, post-market hours on Friday, FTSE released the list of stocks that will be included into the all-world as well as all-cap index. So what we're tracking is the all-world index, which is where the maximum amount of impact will happen. First, like Abhishek mentioned, HDFC Bank will be in focus. The third and final tranche of the inflows will come in this particular rejig, and that is on March 15, 2024. Approximately $400 million worth of buying will happen on HDFC Bank on that particular session. Now, apart from that, there are 16 additions and 1 deletion from the all-world index. We'll go through the list of stocks and we'll highlight the ones that has the maximum impact. Sundaram Finance, a little over $60 million of inflows will be seen. Thermax, Metro Brands, Phoenix Mills, Prestige Estates, Poonawalla FinCorp, Suzlon Energy, will see the maximum amount of inflows, a little over $110 million. Also KPIT Tech, Jindal Stainless, FACT, that's fertilizers and chemicals, Travancore, New India Assurance, Kalyan Jewellers, two power stocks, NLC as well as NHPC, as well as SJVN, RVNL as well as Mazagon Dock. The sole stock that is coming out of the all-world index is actually Embassy Office Parks REIT. That particular stock will see outflows of over $75 million.
Thanks, Vivek, for that. Well, let's shift focus away from equities. Let's talk about the commodities market. And Manisha Gupta joins us to give us a complete wrap-up of what's going on there. Hey, Manisha, morning.
Morning, Nigel. Thank you for that. Well, I'll start with the crude oil prices, which are trading at an 11-week high. As we've seen 2 weeks of constant gains on this one. The geopolitical tensions in the Middle East have been supportive, and so have been the efforts by OPEC to restrict oil in the market. Support also seems to be coming back in metals, where you have silver now trading at a 4-week highs. Copper prices are off its 3-month lows as well. This is because the dollar index has come off its highs after a sluggish U.S. retail sales data. The markets also are looking at a strong EV demand numbers that have come in from Europe and China, and that in turn seem to be supporting many of these metal prices early in Asia right now.
Okay, well, Manisha, thanks very much for that. So more on commodities later. We'll take a quick commercial break here. We'll be joined by Prakash Devan, and we'll talk about specific stocks that's on his radar, and of course, stuff that moved, news over the weekend, all of that coming up in just a bit.
Welcome back. Hope you're having a good Monday morning. Well, Sudarshan joins us. He's done a lot of reading this morning on brokerage notes. Sudarshan, please share.
So in the brokerage corner, first I have UBS on MCX. It has a buy call. Target is raised to 4,300 from rupees 3,000 per share. It says strong growth will flow into profitability in the current quarter, and the new product launches will be key driver for the growth. It expects earnings CAGR of 20% over FY24-26. Next is Citi on PB Fintech. It has a buy call. Target is rupees 1,150 per share. It says it has got regulated not to upgrade license of Policy Bazaar to composite insurance broker from direct insurance broker, and the fresh business market share in existing business will increase multifold. Last is Kotak Institutional Equities on Eureka Forbes. It has a buy call. Target is rupees 680 per share. It says company has reported encouraging volume growth in Q3 and margin expansion and cash generation story to roll along. It has raised FY24 EPS by 13% and FY25-26 by 5 to 6%.
Thanks a lot for that. So those are some brokerage ideas for you to look at. But market expert Prakash Devan is joining in now to tell us how to approach the day's trade. Prakash, hi, good morning, and thanks for joining in. I wanted your thoughts on HDFC Bank. There's an analyst day later today, and there's also inflows of almost $400 million that we're expecting because of the FTSE rejig. And now there's this chatter on whether it's a good time to buy HDFC Bank, given the kind of fall we've seen. What's your, which side of the fence are you on?
Good morning, Sonia. So I think, the sheer weightage of the bank in various indices and people's portfolio is the reason why there's so much of chatter around it. And post the numbers last quarter, what's happened is people have started realizing the kind of two challenges that the bank is facing, particularly on the high CD ratios. While there's no RBI diktat as of now to bring that to certain levels, when you look at the peer group, they are more comfortably placed at 78 to 85, the CD ratios on the credit deposit. But HDFC Bank, thanks to, we know why it has happened, so let's not get into that. But what it can do to solve is, of course, look at least inching up deposit rates, going a bit more aggressive on that. The branch expansion, wherever it is happening, needs to kind of, start kicking in. So there's lots of time that will go into putting things right? So that's the reason why the market is not in a hurry to jump at it, even at sub 1400 zones where it touched last week. So my sense is this analyst meet will probably do a lot to set expectations, the way the last meet did to upset expectations. There will probably be reset expectations. There could be some respite, but I don't see any solutions that would be there that from this, from this analyst day or whatever, that would kind of assuage all the misgivings around that, all the doubts around that. So there'll be some time, but I'm of the belief that at this level, if you have the patience and holding power to wait for at least 12 months, it's a great buy. I mean, so it's not that you need to be in a hurry to buy it at today's levels, but between 1400 and about 1500 is where you would probably get the stock, lock it into your portfolio for significant gains in the future. They'll come back, bounce back, the numbers will fall in place, but you'll have to be patient with the turnaround.
All right. Hi, Prakash. Good to see you in. The point on the ownership of HDFC Bank, almost everyone had gone, top up over there, and most of the fund managers are hugging the index, replicating it and buying a lot of HDFC Bank. The one that's underowned really is the SBI, but that's already had a big run. Post that big run, what's the pick between the two?
Good morning, Nigel. So it's a difficult choice, but I would believe SBI still has momentum in its favor. HDFC Bank probably has consolidation-led value, buying opportunities in its favor. Right. But I would definitely look at SBI for the tactical short term, given the fact that it still has momentum. It's actually started playing catch up much later. For all these years, it didn't do much. It kept on consolidating, which HDFC will probably do now in terms of, moving towards the 2000 mark in the next year and a half, 2 years. But I think SBI still has momentum in its favor. So depending on your horizon and risk profile, you could do that. But of course, PSU banks are still offering a lot of opportunities. So if you look beyond these two and not get into this major fight of private versus PSU and just look at bottom up, I think there are some wonderful opportunities that still exist within that, especially the largest PSU banks.
All right. Prakash, hi, good morning. The other one is PTM. So two important pieces of news flow, 15-day extension, Axis Bank is on board. What do you make of it and what to do with the stock?
So, good morning, Prashant. So, I think it's a reprieve more than anything else. This was bound to happen. And remember, the whole change, this thing, stance that the RBI is taking is to make sure that customers are not put to inconvenience. There's no systemic disruption because of one big, large player just kind of getting out of this system. So, it's more to ease out the exit, but the exit is imminent from the banking part of the business, that is for sure. Axis coming into the rescue is a very aseptic, neutral kind of a thing. There's nothing in terms of a coalition that would kind of revive the banking business of PTM. It's just convenience. For that, you needed a big bank with a network and the ability to do it. So that's where they've stepped in. What should investors do? I think if there's any revival in the stock price, it gives you a far better exit than looking at the screen and just hoping that someday things will look up, somebody will come and buy this out. And, there are lots of stuff that's going around in the market. But I think you need to exit, book your losses. Most of them would be booking losses here, but minimize your losses, but at least use that precious capital to use somewhere else.
Okay, all right. Prakash, request you to stay on. We're going to have this conversation with the management of Skipper, and I think you had a view on that one, so please listen in. Well, they reported a rather good set of numbers in Q3, and year-to-date as well, things are looking very, very good. To discuss this and more, we have Sharan Bansal, the director of Skipper, who joins us on the show. Hi, Sharan. Good morning. Good to see you in. Well, a couple of articles were suggesting that Skipper is eyeing becoming the world's largest manufacturer of power transmission towers. So it appears you've got a big plan ahead. But I want to ask you about the near-term guidance. You're talking about growing by 25%. But Sharan, in the first 9 months, you've already superseded what you did in the entire of last year. So realistically, what is the revenue number that you should end this year with? And on that sort of a base, will you look at growing 25% each year?
Good morning, Nigel. Yes, thank you. Thank you for having me. And yes, we've had good growth in this 9 months. So at the beginning of the year, when we closed FY23 with a top line of about 2,000 crores, we set ourselves a target of doubling our revenue over the next 3 years, which is why we came up with the guidance of 25% CAGR growth over the next 3 years. I'm very happy that this year, thanks to the strong execution, we look very, obviously, we've surpassed last year's number already. And obviously, we'll do much better than 25% this year. I think our goal of that doubling revenue in 3 years' time is well on track. So as of now, we would like to maintain our guidance of 25% CAGR over FY23 numbers. Of course, I would much rather come and pleasantly surprise you next year with the growth over these numbers also. The sector has tailwinds, obviously. But yes, as of now, our guidance remains 25% CAGR over FY23 numbers.
But Sharan, I'm just looking at your numbers. You'll do 3,000 crores this year only, it appears. You're already at around 2,100 crores. You're doing a run rate of around 800 crores. So realistically, what should you end this year with? Somewhere in the vicinity of 2,900 to 3,000 crores? Is that a possibility? And also, if you could tell us the polymer business. That's a smaller part of your business, but there's a big scope out there. How do you see that business shaping up? Do you have a guidance over there?
Sure. I think you're right that this year we should end with a number close to that 2,900, 3,000 mark. And in terms of polymer, we have had very good volume growth this year. Our volume growth has been close to about 35 to 40% in the 9 months, and likely the similar trend in the 12 months, which will end. However, there has been some cooling off of raising prices. So that's why we've not seen that full volume growth translate into value growth. Having said that, in the coming years as well, I think we'd like to maintain, a 30-35% revenue growth in the polymer business. And value unlocking, yes, eventually that would be the target. When that will happen, of course, we'll have to wait and watch. But yes, eventually that will be the target to spin this off into a separate company.
Okay, that's interesting. So you're sticking to your overall guidance of 25% compounded growth. And in the polymer business particularly, there's a 30 to 35% revenue growth target that you have. Got it. Would all of this involve any acquisitions? If yes, what are the kind of acquisitions that you're looking at? Anything in this calendar year itself? And which are the geographies that you're targeting?
Hi. So this, of course, this growth will come both with organic growth, our capacity expansion, both greenfield and brownfield. We are open to inorganic growth, as I have maintained in the past. We haven't found any opportunities worth pursuing as of now. We are looking at various opportunities, whether it's India or abroad. There are certain key markets outside India which are very, very interesting. We will be pursuing them as the time comes. However, it's too early for me to say that, okay, we've identified something and we're already working on it. So probably not in this calendar year. But yes, as we go towards our ambition of becoming the largest manufacturer for power transmission and telecom towers in the world, I think definitely we should see some of these coming up in the coming years.
Okay, but you haven't identified anything yet, but which area are you looking at? Would it largely be in infra projects? Because I do notice that your contribution from engineering products is coming down, while infra projects has gone up. So is that the area that you're going to be focusing on even when you look at acquisitions?
No, I believe that the function of infra revenue growth is more temporary to this year and maybe the coming year as well, because of just the large amount of orders which we've secured recently. However, our focus on growth would continue to remain on engineering products. We are one of a significant manufacturer for our products in India, and we are growing at the global stage. So definitely our focus of growth would continue to be engineering products and polymer in the years ahead.
Right. Sharan, hi, good morning. Prashant here. What's the export contribution currently, Sharan?
The export contribution this year is approximately similar to last year in terms of value. On the percentage basis, it's approximately 30% of our overall revenue. The reason for non-growth in terms of percentage is just because the domestic business has seen a very, very sharp.
Okay. That's fine. 30%, right? Export contribution in terms of value makes.
Yes.
We've heard from other companies we've spoken with that because of the much required rebuilding efforts, because of a conflict, etc., around the world. I mean, Ukraine, etc., is an example. It's going to be a big effort. And is that? Do you see that as a big opportunity? Whenever, I mean, of course, conflicts have to end first. But do you think it'll throw up a large opportunity?
I think absolutely. More than rebuilding, the conflict of Russia-Ukraine has probably made the world a lot more aware about the need for investing in renewable and be less dependent on fossil fuels. I think that is one big shift which we have seen post the Russia-Ukraine war. And that is much more significant because the effect of that is there in a lot of countries, not just specific to Russia-Ukraine.
And how does that play into your business, Sharan?
Because more investments in renewables will necessarily involve investments in power transmission and distribution as well. So that is what we are really excited about. And that's a trend we are seeing globally, where a lot of investments in power T&D is being led by some of the other renewable projects.
Okay, very quickly, what is the margin number we should look at? Exports going up will be good news for margins. You're getting operating scale in polymer business as well. Give us a quick margin number.
In terms of margin, we have done better on the blended EBITDA basis. Last year, approximately, we were at about 9%. This year, we've done close to about 9.5%, 10%. So we have seen an improvement. And the effort, obviously, will be to consistently improve upon the EBITDA numbers. But more importantly, what's going to happen is that if you look at the absolute bottom line at the PBT PAT level, we see significant improvements because from a 1 to 2% PBT level, we've already at 3% plus. And that, I think there's a lot of opportunity to ultimately move towards 5% in the coming years.
Okay, thanks a lot for joining in. Appreciate your thoughts. That's Skipper been one of the biggest movers in the last 12 months. It's up 220% and very optimistic, body language from the management as well. But let's get back to the market now. The market has had its own optimistic body language for a while now. Nifty above 22,000. Anuj is here to give us more details on what to expect. Anuj, the momentum is intact, but the question is for how long? What does the, the setup look like today?
Yeah, morning, Sonia. And today is as good a day as any to hit an all-time high, right? Today is Shivaji Maharaj Jayanti. So first of all, to all our viewers, greetings on that big day, especially in our home state of Maharashtra. Now, a couple of positive things. First of all, Nifty achieved its highest ever weekly close. We have had higher close than what we had on Friday, but not on a weekly basis. And I think that's important because that tells you that the market is ready for life above 22,000. And also, it passed a big acid test last week. When the news was negative, we had that big gap down on the US market and that inflation number scare. And still the market refused to go down. And after a big gap down, actually had a big rally and closed at day's high. When you rally on bad news, that's positive for the market. The earnings season is over. And as we discussed on Friday as well, the Nifty numbers clearly delivered a big beat. And the Nifty is still not expensive, not in the peak out zone by any stretch of imagination. So perhaps it's still possible that you see a decent rally from here. Of course, today's biggest cue is going to be the HDFC Group analyst meet that's going to happen. And that will be interesting. On the Nifty then, the first resistance is the all-time high of 22,126. We start very close to that going by the GIFT Nifty. And the bigger resistance is 22,229 based on the options data. On the Bank Nifty, it's approaching the higher end of the range. And even on Friday, that was the index which stopped the Nifty from hitting a new high. This range has been 44,800 to 46,800. So now getting very close to the higher end of the range. Still not getting that comfort. Perhaps let's see once the HDFC Bank issues out of the way, then we'll take a call. But overall, Nifty is looking quite strong.
All right, quite strong and maybe enough in the tank for it to keep going and to take out these levels on the upside. We'll come back to you, Anuj, for more. We'll take a quick commercial break here. We'll come back and connect with technical experts, Sudarshan Sukhani and Kush Bora, who will be with us with their trading strategy. Stay with us. Okay, welcome back. There's 11 minutes to go for the pre-open session. Sudarshan Sukhani is with us and so is Kush Bora. Gentlemen, great to have both of you here. Thank you very much for your time. Friday we saw follow through and new highs are in sights in that sense. Sudarshan, what's your sense? Is there enough in the tank for the market to take out the earlier highs and then keep going?
Yeah, good morning. See, the markets should take out their earlier highs and make new highs this month itself. So that's the view for the next few weeks. But specifically for today, we have seen 3 big days of rallies with gap ups. The Nifty had a narrow range on Friday. The US markets were down. Most Asian markets are down. Given that environment, we could expect a period of consolidation for the day rather than a renewed rally. But since the trend is clearly up, consolidation should be used to buy on dips. Let's say a dip towards 21,900 would be an excellent buying opportunity, but don't focus on the number. Focus on the fact that the market is going through a dip and consider buying the Nifty. The Bank Nifty is a different story. A large trading range is still intact. It hasn't broken out of it. So we should be patient. Let the Bank Nifty break out of a range. Then we'll start thinking about it. But the Nifty is a buy on dips.
All right, Nifty is a buy on dips. Kush Bora is also joining in. Kush, I think it's the writing is on the wall, right? There are new highs coming very soon. But how do you approach it now? Do you think a fresh buy is something that one can take even at this level?
Hi, Sonia. Very good morning to you. Most certainly. I think, buy on dips is perhaps a prudent strategy. And we've been suggesting that for the last, 5-7 sessions, even when the markets were a little volatile. We continue to maintain that view. 22,500 is our near-term target by the end of March. So we maintain that. However, the markets may not be in the mood to provide, those dips. I think about 50, 100 points here or there is fine. But other than that, if you see the put base that has been rising now, 21,800 and 22,000 has a very strong put base. So the dips may not be as deep as we've seen in the last 10 to 15 days. So even if at these levels someone wants to accumulate, it's not a bad idea to start buying. So Nifty, as I said, we have a positional target of 22,500. The base is shifting higher. So 21,700, 21,800 will start acting as resistance or rather support levels. On the Bank Nifty, 48,000 we're looking at it as a positional target, but 46,100 is the level that it needs to cross on a near-term basis. Once that is taken out, I think we could see a big rally on the Bank Nifty as well.
Okay, all right. Hi, Kush. Good morning. Good to see you in. Then run us through your stocks as well.
Very good morning, Nigel. 2 stocks. Concor is one stock that has recently given a breakout, post-budget also. There was a lot of traction in this. The stock's recently given a good breakout on the back of very good volumes. So I think about 1,010, 1,040 are the near-term levels to look at on the upside. 955, a good strong support zone. The second one, a stock that has recently gained traction, Finolex Industries. Here too, the stock is seeing a very clear sign of rebound. The near-term averages are taken out rather easily on Friday. So from a near-term perspective, 231, 235 are the next levels. 222 is where you should have your stop loss.
All right. Sudarshan, what about you? What would your stock ideas be for the day?
Well, they're mainly on the long side. I have only one short selling idea. That's Bajaj Finance, where an intraday short can be considered with a stop above 68.80. Bharti Airtel is a buy. The stock started falling in a minor correction. It's now in a very tight, narrow range. That's usually a point where a breakout occurs. Buy with a stop under 1100. Cipla is a buying opportunity. The stock is in a strong uptrend. Consolidation should lead to higher levels. Buy with a stop under 1420. And finally, HCL Tech, similar pattern, strong rally, consolidation, buy with a stop under 1645.
All right, gentlemen, we'll leave it there, but more in a bit from now. Appreciate you joining in, Kush and Sudarshan. Well, Chandan Thaparia is with us, derivative and technical analyst at Motilal Oswal Financial Services. Chandan, good to have you with us here. Good morning. It's sort of same question to you. I mean, over the last 1 month, the last time we hit these levels, 22,130 or so, was the 15th of January. And then there were 2 other attempts to take this out, and there was a pullback each time. What's your sense, Chandan? Is this the one? And how would you trade it from here?
Good morning, Prashant and Sonia. Thanks for having me. So, market has really took some consolidative time to spend and form the higher base. Earlier, Nifty made high at 22,124 and 22,126, and it formed the higher base. Technically, it completed its 61.8% retracement, which was near 21,515 zone, and now started to form higher lows. So we believe that now the previous high will be surpassed and market will start the next leg of rally. We believe that now till it holds about 21,750, 21,800 zone, this rally will start the next leg towards 22,222 and 22,500 zone. So major trend is positive and the recent consolidation could aid the fresh leg of rally. So we believe that fresh momentum could be there in Indian market as well. If I look at the data setup, we have seen surge in the put call ratio, which is near 1.22. Even FI's long short ratio has seen turn from the lower zone. Your volatility index is hovering near 15 level. So stable volatility, rising put call ratio, better setup on the price chart indicating momentum could continue. Now talking about Bank Nifty index, the Bank Nifty has given a consolidation breakout. However, it has been underperforming, but technically it formed a double bottom on the daily chart, managed to give a close above its 50-day exponential moving average. So now a hold above 46,000 can take the Bank Nifty index towards 47,000. So Nifty is showing more strength compared to Bank Nifty, but yes, Bank Nifty also could catch the momentum along with the broader market. Now talking about stock ideas, we have positive on the auto, selective cement, and most of the consumption and CPSC stocks in the market. So first that is buy on TVS Motor. We have positive on the Nifty Auto. Couple of days back, we came out with the Nifty Auto basket, and we believe that most of the auto stocks could deliver movement of 5 to 8%. And here we have selected to be with TVS Motor, one of the strongest counter, comparatively lower beta, has seen the price volume surge, consolidation breakout with built up of long position clearly indicates momentum could be there. It is also making higher tops, higher bottom on the monthly space. So one can buy with support of 2090, and TVS Motor has potential to rally to us 2235. Second trading idea, that is buy on Ambuja Cement. After a long time, this stock is again at the verge of fresh breakout. We believe some short covering could be there. Volume surge with delivery clearly indicates momentum could be there. One can buy for an upside move to us 610 to 615. So one can buy with support of 572 level. Last trading idea, that is our preferred name, that is buy on trend, one of the strongest counter, technically forming a pole and flag pattern on the daily chart, given a narrow range breakout. Momentum is clearly there. So one can buy with support of 3920. And we are expecting trend to head to us 4200 plus level soon.
All right. Thanks a lot, Chandan, for that. Let's take a quick commercial break. On the other side, we have the pre-opening rates. We'll also put the spotlight on DrRed, as CNBC-TV18 sources say that DRL plans to acquire Novartis India in the due course of time. Stay tuned for more news on that. Welcome back. Well, we have the pre-opening rates that are just about kicking in now as we speak. The pre-opening rates are settling higher at 22,116, which is almost at all-time highs. Lots of individual stocks are in focus. Tata Power is up almost about 3%. The company has got the letter of interest from REC Power Development to acquire the Jalpura Khurja Power Transmission for 838 crores. So keep that on your radar. And a couple of other stocks as well looking pretty good. CRISIL has had a decent set of numbers. So, that stock should also come up for you. CRISIL up in the green, 6.5% higher now. And of course, Dr. Reddy's and Novartis. Dr. Reddy's is likely in a race to acquire Novartis AG stake in Novartis India. So, and Novartis India is BSE listed. So look at that, up almost 5.5%. But Prakash Diwan is still with us. So let's get a couple of, things going from him. Prakash, the one thing we noticed is there was a huge surge in auto stocks on Friday. Almost all of these stocks are at record highs, right? M&M, Bajaj, TVS, and large delivery buying as well in these names. Do you think there's more upside? And if yes, what would your pick of the pack be?
So interestingly, Sonia, all the auto stocks have very different tailwinds supporting them. I mean, you look at Bajaj, it's clearly the comeback of the export segment. You look at M&M, it's of course the anticipation around the EV launches and the UV business growing. TVS has its electric vehicle, success that's kind of very clearly seen as more long lasting. So I think to answer your question, most auto stocks from a demand perspective seem to be reflecting a bottoming out. In fact, there could be only improvement in demand going forward. And that means that the two-wheelers will probably benefit much more. So you look at a Hero which hasn't moved much, whereas it has the demand salience to ramp up numbers very quickly. So I would believe there is definitely upside left for most of the players, whether it's four-wheelers or two-wheelers. But it's going to be demand-led, and it's just that the triggers are individual, but the sustenance would probably be more generic and more secular in nature going forward.
Okay, all right. Prakash, Minda Corp, that was a stock that wasn't doing anything much. Uno Minda was the one that was running away. We are at CNBC-TV18, we got the management of Minda Corp, I think, in a very rare interview in December 2022. And they were sounding very optimistic about business. If I remember correctly, the stock was in that vicinity of around 200 odd. It's done very well because in 2 years, it's doubled from there. What's your view? We have a large trade that's taken place out there, and Nimesh informs us there's a clutch of big institutions that have got in. Your view?
No, I think you spotted one of the best auto ads plays that's available, just because they don't interact much very intensely with the street. They typically kind of, there are a lot of assumptions that are built around that, and they've always beaten those expectations and assumptions that are built. The beauty about Minda Corp's business profile or the product mix, Nigel, is that they will continue to grow in each of, they are actually like the Motherson Sumi of yesteryears in terms of the kind of growth that's possible in each of the verticals, each of the geographies. So I think it's a fantastically poised business, and I'm more bullish on auto ancillaries now than the auto OEMs, because auto OEMs will probably start plateauing at some point in time if demand doesn't kind of, sustain too well. But the auto ancillaries are getting global. They are getting into very solution-oriented, business models. They're not just focused on products and cost-plus kind of, strategies. So Minda Corp, of course, stands out. There are lots of auto ancillaries which have started suddenly perking up. But definitely, I'm quite positive on that. And as a matter of disclosure, we've had this in the portfolios since almost the last 18 months now.
No, got that. Prakash, let's just talk about some momentum names now. Insurance on Friday was looking very strong. So you had names like GIC, RE, New India. I mean, there is that PSU flavor as well there, right? Stocks ended 10-15% higher once again. Actually, other life insurers, SBI Life did very well. Now, talking about insurance, I don't know if you saw the news on PB Fintech, where their license has been sort of upgraded. So just your thoughts on what you like in this space.
Yeah, so I'm glad you mentioned PB Fintech, because if all the insurance plays are looking promising, which is typically on the back of expectations of growth going forward, the people who are in the intermediation business are bound to do well, right? So when mutual funds did well, CAMS did well. When stockbroking did well, CDSL did well. So it's just as simple as that. PB Fintech as a platform, and now that the RDA is kind of blessed it with the renewal of the license, means that they'll be able to invest capital and grow the business. I would be surprised if, and it's the season of redemption for all these new age, new tech companies, whether it's delivery, whether it's Zomato, whether it's PB Fintech, which actually overpriced themselves at the IPO time, got a reality check done, price equilibrium's been maintained, but now things could probably look up. They have immense capabilities. If they were to scale up, they could actually disrupt the market in a significant way in terms of growth rates. So I'm quite positive on that. I would believe if you had to play the insurance basket, the insurance sector, either you take a basket approach or you play the PB Fintech route, which could probably be very promising.
Okay, all right. Prakash, you heard that conversation we had with Skipper. And I recall maybe 6-7 years ago, we had discussed the stock as well. It did well then, but then it failed, to live up at that point of time. Now it appears they have got the industry tailwind as well. And they appear to have a plan in place, though the stock has doubled, I think, in the last 8 months or so. What's your view at current reckoning?
So you're absolutely right. And I must comment that the way you can recall so many details when you say around these discussions. Nigel, what's happened is the industry is completely transformed from a huge working capital, beleaguered kind of a setup to a very prompt, fast-moving, high asset turns kind of a business. And that's visible across the board in most of the place. Of course, Skipper has a huge advantage of scale that it promises. But at the current valuations, if you really ask me, and of course, I heard them talking about the kind of growth going forward. So on a price-to-earning growth basis, they might still come within a reasonable band. but I still find the balance sheet will find it extremely difficult to grow at that pace which they're talking about. And any capital infusion, any dilution will again be a little bit of a slowdown. So I think it's poised for growth. But the good part of that expectation is priced in the last 12, 18 months. Going forward, it could probably outperform some of the mid caps, but I think at 3,300 crores market cap, it remains vulnerable if things don't look up as compared to the larger players that are in the business. And remember one thing, they have too many things with them. Something or the other might not fire, and then that's where things could look at. They have this pipes business, they have the telecom towers business, and of course they have this transmission business. So it depends on what works when, but it's not something which means that all three would do well together.
Okay. One more stock in focus this morning is Quess Corp. Now that stock is up almost 16% in pre-opening, and here's the reason why. The company has demerged into 3 entities, and this demerger is in order to improve focus on key business verticals. Now, the company has said that the demerger will create a pure play vertical to help with business positioning. They want to simplify the corporate structure due to independent scale platforms, and they want to optimize their capital allocation strategy. Now, the demerger will take about 12 to 15 months' time, but the 3 demerged entities will be Quess Corp, Digitide Solutions and Blue Spring Enterprises. Now, Quess Corp is about 70% of the consolidated revenues. Digitide Solutions is 14% and Blue Spring is 18%. These are different verticals and different businesses. Quess Corp is into workforce management. Digitide Solutions is into InsurTech and HRO business. And Blue Spring Enterprises is into facility management and industrial services. Motilal Oswal has put out a note this morning where they say that this demerger is beneficial. It's a win-win for both the consumers, as for the company as well as for the investors. So hence the stock is up almost about 12.5%. Prakash, a quick comment on Quess Corp and what investors should do here.
So I think this would work well for them. It's a very decent franchise, has very deep relationships. All of this would mean that they'll be able to do much more in terms of client mining, in terms of being able to derive value from each of these verticals separately. But you know what? This is something which was on the cards for a while. It's taken much longer than what we thought, given the ownership changes and all of that. In the same genre, I just want to leave you with this thought, and we can discuss this some other time, Sonia. There's a company which came with an IPO sometime back last year, I guess, but hasn't done well, and that's called Updater Services. Very similar business, but extremely promising verticals as well. Isn't valued, I think, as richly because of the fact that it is yet to deliver numbers that people expect to see. But if you compare the likes in terms of Team Lease, Quess Corp, some similar genre of companies, I think Updater Services could probably be fairly promising. So I'm positive on Quess Corp. What should investors do? They'll probably have to ride this change and benefit out of that and see where it kind of finally emerges or brings out the value. Okay. But not to exit too soon is the recommendation.
Okay, all right. Prakash, and stay tuned for talking with the promoter entity. We have an interview with Thomas Cook that's scheduled later today. I've done an interview with them at around 2 p.m. So make sure you catch that one as well. Thanks, Prakash, for joining in. Well, let's get in Ekta. She's here to tell us about today's momentumizer stock. Ekta.
Thanks for that. Well, I'm looking at a particular stock from the pharmaceutical space, which has seen a good amount of traction last week. In fact, I'm talking about Natco Pharma, which was up 15.8% on Friday. It's close to its 52-week high of 1,050. It's up 97% from its 52-week low of around 520 rupees. It's a part of the S&P 500 index, BSE 500 index, market cap close to around 18,400 odd crores. Now, it released its Q3 numbers on the 14th of Feb. Good numbers. Q3 revenue 758.6 crores. Margins 35%, profit 212 crores, was led higher by the share of Revlimid generic, which is basically that blockbuster cancer drug. Now, Nuvama says the company's focus is on complex opportunities such as the massive Revlimid generic opportunity, robust US pipeline, which includes semaglutide, etc. And they expect a pickup in India as well as the agrochemical business in FY25, which was sluggish in Q2. They've raised their FY24 estimated EPS by 21% and FY25 by 12%, retained buy. So maybe there could be some amount of momentum which could continue, considering pharmaceuticals the hot topic.
Absolutely. Natco was, I think, the big volume-led gainer on Friday. So, Ekta, thanks very much for that. Now, Novartis has launched a strategic review of its India subsidiary. Sources tell CNBC-TV18 that DrRed may be looking at picking up Novartis AG's stake in the India business. Vivek is here with more details. Vivek.
Well, that's right. It's a very interesting development like we just reported earlier. What we understand from our sources is that Dr. Reddy's, which already has, stated its intent to go ahead and become quite significant and grow, its India-focused domestic portfolio organically as well as inorganically, is leading the race in order to go ahead and acquire the complete over 70% stake that Novartis AG has in BSE listed Novartis India. So also what we understand from our sources is that in order to go ahead and acquire the complete stake, they could be offering a slight control premium. So premium could happen to the current market price for this particular portfolio. In the past, Novartis and Dr. Reddy have entered into various distribution as well as strategic partnerships. So it does look like, this particular deal, if it fructifies, could be more of a natural fit compared to any other pharma players. We reached out to Dr. Reddy. Dr. Reddy did not comment to us, but they went ahead and gave a notification to the exchanges saying that so far there is no material development that they would like to report to the exchanges. Like you mentioned, Novartis India also has given an update to the exchanges and to journalists saying that Novartis AG has gone ahead and stated its intent to undergo a strategic review of the entire 70% stake that they hold in the company. They haven't taken a decision as yet, and that is what they told CNBC-TV18 as well.
Okay, and you have a note on Nomura as well that you're going to talk about on Dr. Reddy's.
Well, that's right. On the basis of our news break, Nomura has reacted to it. What they're saying is that given past relationship, they believe that Dr. Reddy may pursue the acquisition of Novartis stake in Novartis India. They believe that this particular acquisition will help expand Dr. Reddy's portfolio in India. Has stated its intent in the past to go ahead and pursue inorganic opportunities as well as partnerships in the Indian market. Valuation is high, but however, it is value accretive as far as Dr. Reddy is concerned. What is the valuation that we're talking about? Currently, Novartis India is trading at 32.5 times trailing 12 months EV to EBITDA and 6.3 times, trailing 12 months EV to sales. The EV of the company is close to 2,000 crore, cash of close to 500 crores. The market cap currently trading between 2,500 crore. So it'll be interesting to see, what exactly transpires. But Nomura believes that Dr. Reddy may go ahead and aggressively pursue this particular inorganic acquisition.
All right, Vivek, thanks very much for that. So that's an important story, and stocks will react as well in just a bit from now. I think we're just sort of counting down the seconds to the market open, and the clock is on your screen. So Paytm, I think in the pre-open I checked, was up 5 on Friday. By the way, Paytm on Friday was down 5%, and then it ended up 5%. All the news after market, so it's up another 5 this morning. Novartis we will sort of look at. Which, of course, Vivek mentioned, and HDFC Bank and other large heavyweights perhaps in focus as well. The first rates are on your screen. We're at 22,080. So very, very close to previous highs. Basically, another 50 points and you were at previous highs on the Nifty. So 22,065 on the index is what you have. The Nifty Bank is starting 65 points higher. We've got about 70 points on it. Coming through as well. That's about 0.15 odd percent. Mid-cap index is starting 0.5% higher, just to bookmark at least the opening values, so as to speak. But Sonia has walked across with more rates. Sonia, over to you.
Well, thanks a lot for that. So as you rightly pointed out, it's a good opening, right? We're holding on to 22,000, and I think it's the Nifty Bank that's doing all the good work this morning, about 100 points higher. But let's take it straight to individual stocks. HDFC Bank is really the stock of the moment because not only is there an analyst day today, but the company will be seeing inflows of $400 million in the FTSE Reject. So I'm keeping an eye out on that, up 0.3% higher. On Friday, we saw a lot of these auto stocks hit fresh record highs. So let's see what's happening this morning. M&M coming in for a slight bit of profit taking. A couple of the other names like Bajaj Auto, TVS Motor have been hitting fresh highs. Look at that, some follow-on buying on Bajaj Auto. In fact, there was a lot of delivery-based buying as well that we saw on Friday in some of these auto stocks, so just keep them on your radar. Apart from that, Novartis and Dr. Reddy's, right? So let's get Dr. Reddy's and the BSE-listed Novartis India on board. Dr. Reddy's is likely to acquire Novartis's stake in Novartis India. So DrRed and Novartis both up in the green at the moment, 10.5% higher on Novartis India, clearly the stock of the moment. Paytm is the other one. It will be partnering with Axis Bank for settlement of the merchant payment bank. So Paytm up almost about 5% odd. Sula Vineyards has been in focus as well, down 5.5% on that one. 14% equity, in fact, has changed hands on Sula Vineyards, so keep an eye out there. Balamurthy will be investing 2,000 crores in a new business, so that stock is up 3.5%. Tata Power has got the LOI from REC Power Development to acquire the Jalpura Khurja Power Transmission Plant for 838 crores, so 1.5% higher there. Good results coming in from the likes of Crystal. So, that stock is up almost about 3.5%. Titagarh Rail got an order worth 170 crores for supply of some wagons to the fresh order that has come through. 7% higher on Titagarh Rail. Manappuram Finance in focus. The IPO of Asirvad Microfinance is in focus as well, so up almost 0.7%. And I just want to look at two more stocks. One is MCX. UBS has raised their target price to 4,300 on MCX, which is a big upside to the current market price. So I'm looking at that. And the other one is Quest Corp. We spoke about that. It's demerged into 3 different entities. So 13% higher. Clearly one of the big movers in the broader market. So strong opening for the market, holding on to the 22,000 mark. But clearly it's about individual stocks today. Back to you.
All right. Well, thanks a lot for that, Sonia. Sula's the one that's under big pressure post that large trade that's taken place. So that's on the bottom of your screen. Keep an eye on PB Fintech as well. Citi had a buy rating out there with the target price of 1,150. They got the regulators now to upgrade the license of policy Bazaar. So that's the reason why, in fact, that stock is up close to around 4.5%. Pull up Eureka Forbes as well. Kotak Institutional, well, they had a buy rating with the target price of around 680 rupees. So let's see whether or not that stock is reacting as well. Keep an eye out on that one. Data Patterns had a big run in Friday's trading session. Nimesh had alerted us there'll be some large names that will come in there. And he was spot on. So, you have Data Patterns is running another 6% after the big move that we saw on Friday's trading session. A few more notable movers today. MRPL, that's up close to around 12%. Massive move is what we're seeing out there. Skipper, we had the management who joined us on the show. They are saying that they're going to guide for around 25% growth. But just putting it in the numbers in, it appears for this year they're going to do close to 50% growth because they're talking about close to around 2,900 to 3,000 crores. So that one's up and about in today's trading session. Gujarat Pipavav is up close to around 5.5%. It had some valuation comfort. It's already seen a big run, mind you. But that one continues to run along. And LIC, they're getting a refund from the tax authorities. So the street likes that. LIC up close to around 3%. So fairly good looking screen today. We don't have any shocker coming in from the US markets later today. So that's another factor at play. But a nice green start, guys.
No, absolutely. And 40 points in the Nifty is what you have. So 22,080 odd is where we find ourselves. I think we mentioned kind of a bulk of what is moving and how things are starting. Minda Corp is just one thing. There was that block which happened, right? The stock's up 7% right now. So that's a large mover, 400,000 shares on Minda Corp, just to kind of highlight that one as well. Then maybe we could look at Wockhardt, which is up about 6%. Stocks at about 515 coming through right now. Titagarh, we did mention. Quest and Natco. Natco is another one. Natco saw a very large move. Ekta just highlighted, there was a brokerage call. 7% on top of the 10% move on Natco from Friday. Stocks at 1,100. By the way, Natco is the 3rd largest volume traded name coming through this morning. RVNL is coming up with a 5% pop. Nigel did highlight MRPL with an 11% gain now with tremendous volumes through. Then you got to go down the list to find more names, but volumes are lacking. Sudarshan Chemicals and Rupa, these are all 5% movers. Star Health is coming up with a 4% pop. Idea Forge is up about 5%. But we'll sort of give it some more time to kind of see if volumes are really going to pick up on some of these names. GIC-RE saw a 10% move on Friday. It's seeing a 2% downtick. Dish TV was up 10% on Friday. That's down about 1.5% right now. Wipro was up 5% on Friday. It was a top Nifty gainer. It's down about 1.33% on in terms of trade right now. So that's on the downside. HPL Electric, I think, saw a large 10% move on Friday. That's down about 1.25%. So these are, minor kind of pullbacks coming through after we've had what other moves that we've had. All right, well, more on markets in a bit, but our market master of the day is Sanjeev Prasad. He's Managing Director, Co-Head of Kotak Institutional Equities. Sanjeev, good morning. Great to have you with us here. Last week you put out a note, which was, you guys are known for speaking your minds and writing what you feel in terms of what you think. And there was an interesting play on the greed and fear theme, and the note was titled, No Fear, Only Greed. So just wanted to start with that in terms of why you wrote that. And second, in that same note, though, you say that nothing negative on the horizon suggests a sharp correction. So how do you square the two, and where does it leave us? If you are looking to deploy money.
Well, it's a tough position to be in if you are a fundamental investor, because on the one side you have stocks which are overvalued, and as we written in the note, the overvaluation increases as you go down the quality curve. the risk curve, the market capitalization curve. So the extent of froth increases, in disproportionate order of the quality of the company, market cap of the company, and so on and so forth. But having said that, this could well continue. You could see a big disconnect between price and value, which is the case currently, continuing for a long period of time. For the simple reason, we don't see anything negative on the horizon, which can result in a big correction in the market. If you look at the macroeconomic fundamentals of India, pretty strong. Growth is obviously pretty decent, and some of the other macroeconomic parameters which people have worried about historically, such as inflation, current account fiscal deficit, slightly on the weaker side, but clearly improving. If you look at the political setup, it looks like the BJP is going to come back to power. At least that's what the market has decided. So no negative news likely from that side. Global setup also looks pretty reasonable. At some point in time, the US Fed and other central banks will start cutting rates. So that should again provide some tailwind for the Indian market. And lastly, if you look at the position as far as Indian companies, household, government, etc. is concerned, there is nothing negative out there in terms of over leverage in the system, which should be a warning bell or something like that. So that's the lay of the land. On the one side you have a pretty decent macroeconomic setup. On the other side you have very expensive valuations. So I guess we'll have to just live with the two. In the sense, you'll have some amount of discomfort with respect to valuations, but I guess we'll have to just live with that.
Okay, that's a big statement, right? You're saying you don't see anything negative on the horizon that can result in a big sell-off in the market. That's
barring the valuations.
Barring the valuations, of course. That seems to be everyone's concern, right? I mean, it's very, very hard to find value even in individual sectors now. So what do you do, Sanjeev? If you have an optimistic view on the market and you want to continue to deploy money, which are the areas where you have some glimmer of hope that, okay, you know what, here you have both valuation and growth?
So, then you'll have to look at, individual pockets, more sector by sector, stock by stock. So thankfully, as of now, you have one large sector, which is the financial sector, where at least valuations look a lot more reasonable. And here the valuations are reasonable for most of the names, whether you look at the large cap private banks, look at the PSUs, although they have run up quite a lot in the last few weeks, months, but at least, you can get your head around the valuations over here. Most of the, the better quality large cap private banks are in the low twos, one time forward price to book. If you look at the better quality PSU banks, now they are more like 1.2 to 1.4 times one time price to book. So, doesn't look that crazy, compared to historical levels. Yes, some of the public sector banks may be looking on the higher side, but having said that, their credit quality, etc., is far better than what we have seen in the past. Underwriting practice have improved, so I don't see anything negative out there. And then beyond the financial sector, I guess you'll have to just look at individual pockets where, like, for example, consumers, staples are discretionary. Obviously, you have a lot of struggle as far as growth is concerned. But hopefully, our view is that over the next 2-4 quarters, you start seeing some pickup in volume numbers. If you look at the valuations over there, maybe 10-20% overvalued in some cases, but at least I can live with them. In the sense they are good quality companies, generate a lot of free cash flow, high return businesses. So okay, similarly, pharma, healthcare services, again slightly on the expensive side, but again very good long-term businesses, so we can live with that. So the challenges beyond these pockets, of let's say financials, some consumers and pharma, healthcare. Beyond that, become a bit of a struggle. IT is looking expensive. The investment space looks very expensive, although the news flow there will be good, looks like. And as I was saying earlier, beyond that, if you look at the low quality names, some of the mid cap, small caps, they have been a tear absolutely. Many of them are up 300-500% last year or so without really any major change in the fundamentals. So I don't know how to deal with that part of the market. So we will probably just exclude that bucket for now. Just focus on the large cap names where you can find at least some value and stick with that.
All right. Hi, Sanjeev. Good morning and good to hear your thoughts. Sanjeev, what do you do with this entire frenzy in the PSU names? And I'm just looking at a few of these railway themes. They're just flying away. RVNL, IRFC. And mind you, these stocks are already up 3 or 4 times, in the last 18 months. What would you do with these PSU names? If you have them, would you book out? And is there anything that you see that looks interesting to buy from the PSU basket at these levels?
Nothing really, if you just want to stay invested in some of the PSUs, as I was saying, PSU banks are the ones where at least, you have some valuation comfort. Something like Nifty has about 1.4 times one-year price, one-year forward price to book. If you look at Canada Bob, about 1.2, 1.3. So at least you have some comfort over there. But beyond the PSU banks, absolutely no comfort on the valuations. And keep in mind the fact that it's not as if there's a big change in the fundamentals of many of these companies. For example, if you look at BPCL, HPCL, yes, they are making record marketing margins as of now, but that is only valid up to a point where the government allows them to make this kind of marketing margins, or if or crude prices continue to be at lower levels. The moment crude prices go up, obviously the marketing margins will come down. So, investors are willing to take a call that their marketing margins will be high in perpetuity. I'm not very sure about that. Right? How do you get comfort on that kind of a thesis? The railway stocks you mentioned, absolutely no comfort over there, given the fact there's a big disconnect in terms of their fundamentals and the kind of valuation they're trading at. Many of them are at, some absurd valuations of 50, 60, 70p. I don't know what sense it makes. In one of the interviews, we talked about Indian Railway Finance, Corp. I mean, that company is now trading at more than $20 billion market cap. Something like 5 times price to book. I don't know how you justify the valuations of some of these entities now. It has got, by the way, got less than 50 employees. Yeah, it's a struggle trying to get your hand around many of these companies now.
No, absolutely. Point taken, Sanjeev. So one of the things, right, which comes as sometimes as a bit of a pushback to these what could be unsustainably high valuations, is that we are in a moment where there's a huge financialization happening, right? Domestic savings are coming into the market in a very large way, and that flow is not going to go back easily. It perhaps will keep rising steadily. How big of but there's no. I mean, how do you model something like that into valuations and what people are willing to pay for it? Because when mutual funds get money, they will deploy it. They may be uncomfortable, but it'll go in.
Yeah.
So just your thoughts.
No, I agree. It's a very uncomfortable position for even the fund manager, right? You continue to get money. What option do you have but to deploy, as you rightly said? If you look at the amount of fund flow which is coming in last month, that is January 2024, you had almost 30,000 crores of money coming into domestic equity mutual fund, which is at record levels clearly. The monthly SIP rate has now gone up to something like 180 billion rupees, which is more like $2 billion plus kind of a number. So, obviously the fund managers have to deploy, but, I just hope, we are not losing sight of the bigger purpose over here, which is ultimately to, act as fiduciaries for the people who are giving them the money, right? It cannot be a situation that just because they're getting money, we'll continue to deploy irrespective of valuation, irrespective of the fact whether this, valuations make any sense or not, whether the fundamentals of this company is, correspond to the valuation they're trading at. Somewhere, some of the active fund managers will have to start taking the call and start, at least gently educating the people that, look, fine, you're giving us money, it's our duty to deploy, but, be careful as to what you're getting into. I don't really hear that commentary from any part of the market as of now.
Mm-hmm. Okay, one final question then from my end before we let you go. I understand that there is no real threat in the market right now. Everything seems to be going well. But that is generally when the market doesn't oblige, right? Apart from valuations, is there any other concern that you have that the market should sort of keep on its radar?
Not really. As I said, it could be my famous last words for all you know, nothing negative and then something boom, something goes wrong. Hopefully that will not be the case, because as I said, it's hard to, identify a cause for a market correction before the event actually, and this time around, if you look at the situation, there's nothing really negative with the Indian economy. It's doing absolutely fine. As I was saying earlier, all the macroeconomic parameters are in great shape. The political setup is fine, social setup is fine. Leverage is not really a problem when it comes to corporate, government, or households. So I don't know what is the trigger over here. Barring some extraneous event, like war, pandemic, anyway, we can't forecast that, and I hope nothing like that happens anyway. Very hard to say what will result in a correction. All I can say at this point in time, you'll have to just live with the discomfort which we are in, high valuations. But yeah, it probably, that's the lay of the land, and probably it will continue like that for some more time.
Well, always good hearing your thoughts, Sanjeev. Thanks so much for stopping by and speaking to us here on CNBC-TV18.
My pleasure.
Looking forward to having a chat with you in the time to come. Well, time to move on then, and let's get to a CNBC TV18 exclusive then. Nalco reported a solid set of numbers in the past quarter. The result was driven by lower power cost and also good operating performance in both their segments, alumina as well as aluminium. To discuss this and more, we have Mr. Sridhar Patra, the CMD of Nalco, who joins us on the show. Hi, Mr. Patra. Good morning and good to speak to you after a very, very long, the analyst community as well is waiting to hear you out. So we are happy to have you on the show. Well, let's talk about the past quarter's performance. It's looking absolutely superb. Blended margins coming at around 23%, the highest we've seen in the last 6-7 quarters. So give us a couple of numbers here. One is on the power cost side, you've saved quite a lot of costs, which is good. Tell us, out of your total coal requirement, how much of it is coming in from captive sources? And how do you see that scale up? And what does it mean in terms of margins?
You see, for our 0.46 million ton of smelter as in existence, almost 67 to 70 lakhs coal is required for production per annum. And we are fortunate, we have ramped up the production of Utkal D and E. And normally any mine which comes for operation 15 to 18 months, but within 6-7 months we could make it operationalized. And we have ramped up the production in the current financial year. We will be producing 2 million ton from our own mines. And the next year we have a plan to make it 4 million tons. And as for the provisions, 25% we can produce more also. So it is a efforts made to maximize our own coal consumption from our captive mines. So this year we have planned 2 million tons. Next year we have planned 4 million tons.
Just to get those numbers out of the way, sir, 6.8 million tons is the requirement. For FY24, you're getting 2 million tons from your captive mines, right?
Yes.
And for the next year, it will be 4 million tons. So that's FY25 itself. So, good amount of captive coal that's coming in there, which obviously helps in a power-intensive sector like aluminium. Give us a few more details. What does this mean on margin outlook? Because prices seem to have bottomed out, both on aluminium as well as alumina. And we're seeing a mild uptick January as well as February. What is the guidance over there and what does it mean in terms of margins?
If you want to speak about the margin, these are the price sensitive. Basically, I will not spell out the exact figures, but I will tell you, if you see the LME price hovering around 2000 to 2100 since last 9 to 10 months. In 22-23, the LME average price was 2520. But in the current 9 months, it is average 2,200. And if you analyze quarter to quarter, in the quarter 2, it was around 2155 and quarter 3, it is around 2190. It is marginally increased. And we are quite hopeful that in the quarter 4 of the current fiscal, we will be getting above 2,200. So on an average, it will be above 2,100. This is my expectation of price for the current fiscal with reference to the aluminium. And so far alumina is concerned, basically it is 15 to 17% of the LME price. So it ranges between $330 to $370, $380. It is coupled with supply and demand forces. Basically,
Yeah, Mr. Patra, just to come back to that, you said aluminum LME prices, you're expecting it to be above 2,100 per ton going ahead. But, recently we've had some issues, right, with respect to the Red Sea conflict, etc. Has that impacted prices in any way?
You see, basically the market-driven forces, we cannot say whether it is impacted or not impacted. If you analyze for the whole year as one financial year result, then it will have a mixed impact. The input prices increases, again it reduces, and sometimes the LME increases and reduces. So it is a question of whole year data will speak.
All right, Mr. Patra, hi, good morning. Prashant this side. There's two questions. One, so in FY25, over 50% of your coal requirement will be captive, as you said. So that is pretty significant. So generally, in terms of cost competitiveness, I'm assuming that that's a big boost. If you could just sort of answer that. And second, when do you expect an additional 1 million tons of alumina capacity to come on stream, sir? And what is the capex needed for this?
two things I will tell. The captive coal mines, which we have mined out at present and we are made operational much before the scheduled time, and we are quite hopeful it will give substantially to the bottom line. Because basically the raising cost and versus the price at which we buy, whether it is e-auction or linkage coal, whatever may be, there is a huge price difference. So definitely it will add back and it strengthen to my bottom line. And so far 1 million ton refinery is concerned, we are quite hopeful by 2025-26 mid, it will be capitalized. And the capex investment for this is around 8,000 crores. And the company is confident to fund its resources from its internal accruing. And if required, we will take the loan. But for the time being, we have not availed any loan.
Okay. And what is the cash balance as of now? 3,900 crores?
Yeah.
3,900, right?
Somewhere around that.
Got it. And per ton of coal, how much do you save? You said it's substantially low. How much is it?
You see, 667 rupees we are giving to the MDO for raising the coal. And other taxes and duty put together, it will be much lower than the cost at what I am buying either linkage or bridge linkage.
You want to give us a number, sir? 1,000 rupees, 500 rupees, 1,500 rupees, what could it be?
Exact number, I will not be communicating.
We are okay with the range, sir. A range. A rough range, Mr. Patra, if you could give us. Per ton of coal, how much are you saving?
Coal, I told you, we will be using 2 million tons.
That's right, sir. On a per ton basis, how much are you saving? I just want to get a rough number out.
No, those are price sensitive. I cannot pass on how much I'll save.
Okay, all right. We'll let you go on that one. But, your alumina expansion as well, you've given us a guideline by FY26. So we got that. Mr. Patra, one more question. I need to ask you this because some part of the street is expecting maybe there could be a divestment of NALCO. Do you want to clear the air? Have you heard anything from Deepam, whether NALCO is on the block or not?
No, I have not received any formal communication, or informally also I have not gathered any information.
So there's no truth over there, right?
Hope so.
You're keeping it open-ended, sir. But you haven't heard from now, so we'll take that. But there are some diversification plans as well. There was that JV that you're a part of with regard to lithium mining as well. So could you tell us what is 8,000 crores is for the alumina expansion? For this diversification plan with regard to some rare minerals, how much of money are you all keeping? And by when do you see some kind of returns coming out of there?
You see, we have various business plans. Now the company has also promoted Kabil and we have signed the agreement with the Argentina government for lithium extractions. And we are also having downstream plans. And we have also business plan for expansion of these smelters. So various diversification business plans are there. And we are also seriously thinking for the merchant mining. So we are trying to explore, if you win in the auction, we'll definitely go for merchant mining, which will add also profit.
But no concrete plans as of now. You're looking at diversification, but that will flow, I guess, in the next 3-4 years or.
If you ask me, basically it is a dynamic situation. Every time the scenario changes. So as such, we have a plan for expansion of this alumina refinery, which is in progress. And the smelter plant also will be expanded. The investment approval has been accorded and land acquisition is under process. So these are the basic business model. And the intention of this is to support throughout the life of the company to earn profit. So diversification, what will make without compromising with the intent and ethics of the business. Our intention is to provide primary metals to the secondary industries. There are two differences. One is business, one is industry. The businessman will look forward the profit, but as an industry, we want to grow the economy because our secondary industry, whom we have assured raw material securitization, we want they should grow. It is not at the cost of them we want to grow. So we want to contribute to the national economy not standing alone by NALCO along with the other tertiary industries.
Okay, all right. Final question, sir. Dividend has been another juicy topic, because you all have been giving out dividend and the shareholders are very happy. What's the dividend policy over there? Will you continue to pay out? I think already this year you paid 1 and 2 rupees.
As a public sector undertaking, we are bound to follow the DIPAM guidelines. Okay. And as per the guidelines, 30% of the profit or 5% of the net worth, whichever is higher is to be paid dividend. And the company has been paying higher than that dividend. And we assure all our investors will not disappoint them.
Okay. All right, Mr. Patra. Always a pleasure speaking to you, sir. Thanks so much for speaking to us here on CNBC TV18. You give us the outlook in terms of aluminium prices. Coal, nearly around more than 60% will be coming from your captive mines, which will result in saving. Clearing in the air that the company is not on the block and you look to pay out dividends as well. Always a pleasure talking to you, sir. To speak to us more often, we'll be happy to host you on the show.
Well, Mr. Patra, thank you very much from all of us here. Appreciate you joining in. PSUs, right? NALCO, we were talking about public sector, but it's again come back right on top as the top theme this morning, right? So we were talking about only MRPL, but take a look at what else is going on. MRPL is up a little bit more, 14%. But I just want to put out these stocks. NHPC is now the top volume-led gainer. It's up 6%. There is RVNL, nowhere in the mix in the morning when we opened. 7% on RVNL, 268, 269. SJVN is up 5%. So, yeah, I mean, once again, these are strong movers which are coming through. And a few other non-PSU names. Reddington is up about 10%. That's a large mover. Sundaram Finance is up about 6%. 4,090 on Sundaram Finance. Inox Wind, I mean, a tremendous 2024 so far for the company, for the stock, 5%. And CRISIL, out of the blue, is up about 8% or so as well. So this is a strong-looking screen. Market breadth is pretty positive in the vicinity of almost 3:1. We'll take a quick commercial break here. We have the management of Glenmark Pharma joining in to talk about their third quarter numbers and F525 outlook as well. Stay with us.
Welcome back. Well, it's not a bad market. I mean, it's absolutely flat if you look at the headline index, but the mid-caps are doing very well. So up about 190 odd points on the mid-cap index. Many stocks are sitting at fresh highs. Today, we were just talking about a few of them. Inox Wind is at a fresh high now. It's up 25% this year already. The big theme has been renewable energy in the last couple of weeks and months, and Inox Wind is one of them that has, sort of reduced its losses, and now the stock is doing extremely well. But Glenmark Pharma is the next management in focus. The company has reported a weak set of Q3 numbers. The revenue slipped nearly 28%, but the company in its conference call indicated that they will be net cash positive this year and will see recovery in the India business in Q4. V.S. Mani, who's the Executive Director and Global CFO of Glenmark Pharma, joins us now to talk about that. Mr. Mani, thanks a lot for joining us. I understand that this is a transition quarter for the company, so there has been a bit of, a degrowth as far as the top line is concerned. But can you guide us more on, what's happening with the India business? The distribution model has changed this quarter, so that has impacted the business. And what are you expecting going forward? When do you see growth return?
Good morning. Thanks for inviting me to your channel. So basically, the company implemented changes in its distribution model, and we actually consolidated our stock points. Okay, and this led to basically channel correction. The inventories in the channel, and this is basically a one-time correction. Okay, if it were not for this correction, our growth would have been almost 9% for the quarter. And as you can see, even IQVIA reported that for October to December, Glenmark grew at about 11.9%. So the growth in the secondary market has been pretty healthy. Okay. So the advantage of doing this correction has been that basically it will help us to improve our working capital, at the same time improve our margins. Also, in future, the secondary sales and the reported numbers will be close to each other. And all in all, we felt that this was key to do. And that's why the company did this. But barring this, the underlying growth has been pretty good.
But I just want to understand on the operational front, right? This time there was a big EBITDA loss of about 200 odd crores. By when do you think you can get into the black on the operational front? Will it happen in this financial year itself?
Yeah, it will happen in the next quarter itself. I mean, barring this, if we were to have actually not done this correction, we would still have been in the, we would have been in the black. So this is the first time in a long time we are there. But barring that, we would have been positive. Okay, so that's how we look at it.
Mr. Mani, hi, good morning. So beyond this the quarter that we are in, for FY25, sir, what should we expect, sir, in terms of growth, both in the India business and in the US business as well? I mean, the last time we spoke, you'd put out some guidance for the US business. So if you could just sort of talk to us about FY25.
So obviously, I'll try to guide you on the sales side. The rest we'll probably wait for the Q4 to get over in terms of EBITDA, etc. Just to guide you, the India business, normally in a good quarter, we have anywhere close to 1,100 crores as turnover. So I think going forward, that is the trajectory we'll see it at. And even if you take our secondary sales or historically, we've always grown at close to 10 to 12%. So that growth will always be there. And coming to the overall company growth for the next year, I think we are again looking at about a growth of almost 10 to 12% on an overall basis, because some of our geographies like Europe, emerging markets, they've all done very well. Now, coming back to the US, as you can see, emerging markets have grown at almost 18 to 20% in the first 9 months. Europe has grown at an astounding rate of close to 50%. So these have been very good growths. And as I explained to you earlier, if it were not for this one-time impact, India would also have seen a very good growth. US, obviously, the last couple of quarters, we have not had any significant launches. Okay, so because of that, as well as obviously the price erosion has come off, because of these two factors, the turnover is at about 92 million or so. And this quarter, of course, we have launched a couple of injectables, which we are hopeful that they will give meaningful sales in the coming quarters. So we are hoping to touch close to 100 million going forward in the US.
So
as far as the margins are concerned, obviously in the coming year, we see improvements because of one, obviously, as we had explained during our call as well, on the innovation side, because of all the changes that we have made and the alliance that we have, we are expecting a sort of reduction in our expenses by about $25 to $30 million, as well as Realtor is doing well, and also, my expansion in geographies of Europe and Latin. So I think that's how we see the coming year.
So a top line growth of 10 to 12%, margins between 18-20%.
Margins, as I told you, it will grow better than where we are in terms of. But to put a number, we'll probably wait for the Q4 to get.
Okay, all right. Hi, Mr. Mani. Good morning and good to have you on the show. Sir, your operational performance, you've given us a fair idea. $100 million in the US business on a quarterly basis. I think India goes back to 1,100 crores. But over the weekend, a couple of my colleagues were working on the story that it's a possibility that Novartis could be on the block. How does, would you all look at it first of all? And do you think there are any kind of synergies that could play out between you all? If it's on the block, I would like to know, what are your thoughts?
No, we are not really looking at any significant M&A right away. We have been actually, we have been in a way, in licensing products that you saw, some of those that we saw, the envafolimab, and there was a product, Winlevi. So these are products we in-license, but we haven't looked at M&A in such a big...
Have you heard about the asset being on the block though, sir?
No, sir, we are not really so much keen.
If it's on the block, are you all interested?
No, I wouldn't know.
You all would not be, because there would be some kind of overlap. There would be it could bring something to the table. So if it's on the block, you all will still not be interested?
No, sir, we are not really looking at. We are looking more at what critical product additions, platforms that will help us to grow our business. As such, if you look at it, Glenmark has been doing well. We have got good growth across all the geographies. We're doing well. Barring some things in the US where we are also working on correcting where we are. I think broadly the business is doing well. So I don't see a reason why we should immediately.
Okay, can you give us? Sure. Thank you for that clarification. Can you give us an update on the US FDA, regulatory issues? When can we expect some remediation to be completed? If you can tell us when is the re-inspection happening across all of your plants, right? Whether it's Goa, Baddi, the Monroe facility. Can you give us a status check on that?
So as far as the remediation is concerned, I think broadly we are done with everything. I mean, nothing significant that we expect in the coming quarters. Even this quarter, it was not so much. We are hopeful that an inspection will happen in Q4 or Q1, and we'll see some, uptick in the Monroe facility.
By when on the Monroe facility?
By Q4, by the coming, that is this quarter. Obviously, this is 1.5 months left, or in Q1 of FY25, one of the two.
Okay. And in terms of Ryaltris, the respiratory drug, I just want to understand what is the way forward? What are you expecting in terms of from this drug as well as from other new launches in this space itself?
So Ryaltris has been doing pretty well, madam. We have launched it across many geographies. As you can see, currently it's almost like a $45 million product. We are looking at almost like a $75 to $80 million in the coming year. Now it's obviously we've been selling through partners as well as through geographies where we have field force. I think it's doing quite well in Europe and beginning to pick up well in the US as well. So we are hopeful, that and also our partner in China will support those things. So I think overall we are looking at a good coming year for us. And as far as the other product launches in the respiratory side are concerned, they are actually obviously you can see some of them are done well in Europe, and going forward, whatever launches we are looking at, I think they will do pretty well.
Okay, Mr. Mani, we'll leave it there, sir. Thank you very much, and it's always good speaking with you after the quarter numbers. We look forward to future interactions as well. Thanks very much for joining us. The market's down 3 points, so the gains are gone, and we are absolutely flatlined. 22,040 is where we are at. We'll take another quick commercial break here. We are back with more on the other side. Okay, I think we have the management of DrRed Rail Systems joining us right now. Najib, you want to take us through that?
All right. Well, let's go straight to it then. DrRed Rail Systems is surging in trade after receiving an order worth 170 crore rupees to supply 250 specialized wagons to the Defence Ministry. To discuss the business opportunity and more, we have Mr. Umesh Chaudhary, the Vice Chairman and MD of the company. I'm Mr. Chaudhary. Good speaking to you, sir. And this big opportunity is coming into play now. Could you tell us more about this particular order that you've got of around 170 crores? And also, if you could tell us, how much does defense currently contribute to your sales mix, and where do you see that number headed?
Yeah, good morning. Always a pleasure being with you. Thank you for inviting me. So this is a very important order for us, because this is for of course, it's for the freight rail system business. It's for specialized wagons, but it's from the Ministry of Defense. We have done similar wagons for the Ministry of Defense in the past. And, so this business, while it is from the Ministry of Defense, would actually get counted in our freight rail system business itself. In terms of the overall size of the business from the defense side, we are primarily focusing on the naval part of it, the shipbuilding part of it. And I think last what we declared was about 400 odd crores of orders that we had from ballpark of that from the Navy. As we had mentioned in the past that, right now, because of the traction that we have from the railway part of the business, we are really focusing on that part right now. And defense is something that we are keeping it as the additional lever, which we have announced to, if required, look for a strategic partner to grow that business as well. But right now, the focus is primarily on the railway part.
Okay, so just to revise that number, how much is it contributing now in percentage terms?
So the total order book that we had announced was about 28,000 crores. So this is about 400 crores. So it's not a very significant
400 crores.
Number. Yeah.
Okay, all right. Can you tell us, defense, how much does it contribute to your sales at the moment? What is the kind of potential that you see in the defense space, say, over the next 12 to 18 months?
So defense is not a very large part of our business right now. As I just mentioned that about out of 28,000 crores, the defense business would be hardly about 350 to 400 crores. And the similar is the story as far as the revenue or the profitability is concerned. But what we do see is that the defense can be a very significant part, maybe 3-4 years from now. So we are kind of keeping this as the reserve engine for growth. Because the two engines that we have, the passenger rail side and the freight rail side, are really firing full gun. So we are focusing on that and kind of utilizing that to grow at this point of time. And the defense will really be the third engine of growth that will come in post that. And we are continuing to kind of keep that on slow fire right now.
So can you tell us what is the new order bidding pipeline? What kind of opportunities do you see across the board, right? Whether it is orders from the government, private sector orders, what can we expect over the next 12 to 18 months?
So the railway side of it is very, there are new opportunities that are coming up on a regular basis. There is a very good traction that's happening. Of course, we will see some slowdown in the next couple of months because the model code of conduct, when that comes in, then obviously the public procurement slows down. But then, post that, I think we are going to come back with a real bang, hopefully, and the infrastructure spend that is likely to be there is hopefully going to be of a different magnitude altogether. With the new Viksit Bharat and India looking at becoming the third largest economy in the world, the infrastructure boost is going to be quite substantive. So, there are a number of tenders that we have participated, number of tenders that have been issued, both in the freight side, both in the passenger side. But we would definitely talk about them once, as and when we kind of successfully win some contracts. We'd not like to talk about them prematurely.
Okay, got it. All right. Sir, if you could give us a few more details. Currently, you're going at a run rate of close to around 1,000 crores per quarter, very roughly. How do you see growth shape up from here on this base of what you're going to do in FY24? What is the growth you look at?
So, if you look at the mix of the two business segments that we have right now, majority, almost 90% plus of our revenue comes, or approximately 90% comes from the freight rail side. And passenger is a business that is just going to pick up, whereas the order book, if you look, is almost equally divided between the freight and the passenger side. So on the passenger side, so while on the freight side, we will be, as we had announced, we've already touched 1,000 wagons a month in December. So we've kind of broken the glass ceiling, broken the mental barrier. Now the next target is to stabilize from the 700, 750 wagons per month average level to 1,000 wagons per month average level, which we should be able to do in the coming financial year. And then the passenger side starts delivering revenue both on top line and bottom line. And that would happen in the later part of FY25 because that's when the Surat, Ahmedabad and Vande Bharat will start into production. The first train, of course, of Vande Bharat is likely to be delivered in June 25. So, that is going to be the big turning point for the passenger side. When the Vande Bharat...
Okay, so once that happens, what will the contribution be for your revenues purely from Vande Bharat in year 1 and year 2?
So, according to the contract, we have to deliver the first 2 trains in June and August 2025, and thereafter it will gradually ramp up to approximately 2+ trains per month, which will, I think, if my memory serves me correct, will be in about a year, 16 months' time that we will hit that run rate. So it's going to be a gradual ramp up from June 25.
Okay. All right. Final question, sir. You said there's a possibility you look at bringing in some kind of strategic partner in the defense vertical. At what scale would you look at bringing, someone in? And also, what is the time horizon for this?
We had announced this a couple of months ago that the board has decided that we'll be looking at this possibility. We are working on it. It will take a little while, but maybe in the next 6 months to 12 months. So there's no kind of definitive timeline that we have put to it, but there's something that we are exploring.
Okay, Mr. Chaudhary, good speaking to you as always. You're speeding ahead, so to call it. Stock market as well as liking it with regard to the announcements you've made. And as we speak, the stock is up close to around 5%. We look forward to having a chat with you in the coming weeks as well. For the time being, though, we'll slip into a short break. You come back, the markets are as flat as can be. Prakash Gopal join us to give us some trading strategies.
Welcome back to Bazaar Morning Call. Well, for now, let's get a quick update on what's happening in the technicals of the market. Prakash Gaba is joining in. Prakash, the market is all right. I mean, it's holding on to the 22,000 mark, just consolidating for now. Would you build on to these gains, and what are the stocks that you're looking at right now?
Yeah, good morning to you. So far, Nifty and Bank Nifty both look okay. The problem with Nifty is that it's open with a gap up, and open and high is the same, so that's why it's into a resistance zone. The resistance zone is 22,000 to 22,100. It's open there. So there's a bit of struggle there for a trading opportunity. Otherwise, the trend is still intact up. We are in buy mode. If you get a dips, we are buyable. But where to buy, where to sell is an issue on Nifty, so I'll avoid it. Bank Nifty, again, I would say that 46,500, 46,400, actually 46,400 is a very strong support zone. As long as it stays about it, I think an upside to 46,700 to 47,200. That zone is possible. But for that, the trade has to be between today and tomorrow or day after. So far, it's a viable dips. What do I like? Well, I think I would look at few stocks here. One is Bajaj Finance. That looks good to me. Has formed a good base for on 10 to 12 days. And trading at 6717. 671, I would have a stop below 6,700 and trade long. Possibly the next technical target is 6,800 in the days to come. So Bajaj Finance looks good to me. Looks like today is the day for Bajaj Group. Second stock that I like is, I think I would look at perhaps Dixon Technology. Yes, trading at 6527. I would have a stop below 6,500, again 27 rupees. Possibly up move is there on the cards, and 6,600 would be the target. So two stocks here, Bajaj Finance and Dixon.
All right, Bajaj Finance and Dixon. Prakash, thanks very much for that. We'll have more in a bit with Prakash. Well, markets absolutely flatlined. It's like a red and green blinking. Focus on commodities. Manisha is here with what's the top commodity on our mind today. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at the rubber prices, which are trading at a 5-week highs. Well, there are various supportive factors which are keeping the rubber prices in favor. One is that there is strong demand improvement coming in from the auto and the tire manufacturers there. Also, when you look at the supply concerns that have been erupting from various producers within the Asian markets, especially Thailand, where we have seen recent rains disrupting supplies there. And then the EU deforestation matter is something that the markets are keeping a keen eye on. It also has to do with the Red Sea impact, where you have seen disruption within the routes, and also higher times, free trades, unavailability of containers. Those are some of the factors that also are keeping the prices higher. If you look at the global markets, then it is also about the EV demand, which the street is keeping an eye on. These are the numbers really, because in 2023 January, you saw 660,000 units being sold when it comes to new EV sales. For Jan 2024, it has been almost a double number at 1.1 million units there. Keep an eye also on in sense of the deficit in the global markets there, and the global rubber production, when you look at that, has been slightly on the weaker side. The international markets have been in deficit since 2021, and 24 could be no different. Production in 24 is estimated at around 15.05 million tons, while consumption is anticipated much higher at 15.52 million. And remember, we are in a deficit, and this is going to be a fourth straight year of deficit as far as rubber availability is concerned. Keep an eye also in the Indian rubber markets, and this is the production and the consumption numbers that you have seen in last few years there. So while the production has been increasing, but at a very small note, the consumption clearly has been jumping with leaps and bounds. The markets do believe that last year, while the rubber prices were quite flat, but this year you could be looking at surge continuing in for those prices.
All right, Manisha, thanks a lot for that. So let's now get back to tracking the equity markets. Vivek is joining in to tell us about L&T and why he's watching that one. Vivek, over to you.
Well, good morning. That's right. It's a bit of an important development as far as L&T is concerned. Now, newspaper reports are indicating that Saudi Aramco, which actually had significant capex plans in order to go ahead and upgrade some of the major refineries and also go ahead and do capex expansion in terms of capacity build-up, it now appears as though they have gone ahead and deferred some of the important projects that they had in the pipeline. In fact, the reports indicate that Saudi Aramco has deferred the bid process for over $10 billion worth of orders, and this is for the large Safaniya oil field project. Reports earlier had indicated that L&T, number one, had participated in the tender, and also had reported that L&T was favorably placed, well placed to get bids as large as $5 billion. So now this particular development that indicates that there is a deferment of the entire process is something that will be seen as a bit of a setback to L&T. Now, it is important to note that L&T, had told us post Q3 that they had participated in the tender, but they were still awaiting feedback in terms of, whether the bid, they had won the bid. So this particular bid is not part of the order book that L&T already carries. But it's a bit of a negative setback given the fact that it indicates that the large hydrocarbon segment ordering activity that was extremely robust so far, this particular development indicates that there could be a slowdown over there. We reached out to L&T today. So far, they have not yet responded to us.
All right. Vivek, thank you very much for that. Stock's down about 1% or so, but that's important news flow in terms of future orders, which perhaps were, L&T is as good a company to be able to win some of those projects as any globally, and some of them being deferred for now. So that's essentially what's coming through. Vivek getting us that story. We'll take a quick commercial break here, but we're going to be back. My colleague Lata will get chatting with Chetan Iyer, Chief Asia Economist at Morgan Stanley, and the Decode US Consumer Price and Producer Price data on the other side. Stay tuned.